Today, we're diving deep into a company that sounds like it's straight out of science fiction, CRISPR Therapeutics. We're talking about a company that can literally edit human DNA to cure diseases. It's absolutely revolutionary. But here's the billion-dollar question for investors. Does a medical miracle automatically make for a miracle stock? Let's break down the data on CRSP and find out.
And that really gets to the heart of it, doesn't it? On one side, you have this incredible functional cure for a terrible disease. But on the other side, you've got a stock price that's really struggling, just surrounded by uncertainty. So what is this? Is this the ground floor of the next big thing in medicine? Or is it just a super high-risk gamble that's facing some major commercial headwinds?
So here's our game plan. First, we'll talk about the mind-blowing science. Then, we'll get into the tough business realities. After that, we'll decode the financials and talk valuation before I give you our final verdict and price target. And hey, make sure you stick around to the end, because we're going to explore a couple of other ways you can play this space.
All right, first things first, let's talk about the science, because you have to understand this part. It is truly monumental, and it's the foundation for the entire bull case for this company.
The engine driving this whole thing is something called CRISPR/Cas9. Now, the simplest way to think about it is like a pair of molecular scissors. It lets scientists find a very specific faulty gene in a person's DNA and then just snip it out, or even change it. It's kind of like having a search and replace function, but for the human genome. It's wild.
And here is the proof that this tech isn't just theory, it works. Their very first approved therapy, a drug called Casgevy, is basically a functional cure for sickle cell disease. I mean, for patients who have lived their entire lives with this debilitating pain, a 93% success rate in stopping those episodes, it's just, frankly, miraculous.
But, and this is a huge but, here's where the story gets really complicated. The price tag for this one-time cure, $2.2 million per patient. That number right there creates this massive tension between the incredible medical value and the, practical, real-world challenges of actually getting this therapy paid for and delivered to the people who need it most.
Okay, so the science is amazing, we've established that. But a great stock needs more than that. It needs a great business. And when we look at CRISPR's business, we start to see some very real burdens that every investor needs to understand. So the bull case for CRISPR, it starts right here with their competitive moat. Being the first and the only company with an approved CRISPR-based therapy on the market is a massive, massive advantage. It gives them a huge head start and really cements their position as the leader in this brand new field.
But that moat is under attack from a couple of different directions. First, just getting the drug to patients is a huge challenge. The logistics are incredibly complex, and so far the patient uptake has been really, really slow. And second, there's the risk that their technology could become obsolete. Gene editing is moving so fast. Newer techniques like base editing, which is more like changing a single letter in a word instead of cutting the whole word out, could make CRISPR's current tech look outdated before it even turns a real profit.
Now, I want you to just look at this number for a second. Let it sink in. It's a pretty significant figure, and it points to a serious concern coming from inside the company itself. And here's the story behind that number. It represents how much of his stake the company's own CEO sold in a single transaction back in January. When CEO sells off nearly a third of their holdings, that is a powerful signal that investors, you just can't ignore it. It raises some really serious questions about how confident the insiders are about the company's immediate future.
Okay, so that leads us right into the financials. We need to look past the hype, past the story, and see what the numbers are actually telling us about the health of this business right now.
This one chart tells you pretty much everything you need to know about their current struggles. Wall Street was expecting almost $9 million in revenue. The company delivered less than $1 million. Look, that's not just a miss, that is a catastrophic shortfall. It confirms just how hard this commercial rollout has been. The reality is falling way, way short of the hype.
Now, the financial picture isn't all bad, but you really have to look closely. On the one hand, you've got this nightmare net margin of negative 1,200%. That means they are burning an unbelievable amount of cash. But on the other hand, the company is completely debt-free, and crucially, it's sitting on a war chest of about $2 billion in cash. That strong balance sheet is their lifeline. It's what gives them the runway to try and figure out this revenue problem.
So, how on earth do you value a company like this? It's really the classic battle between the hype of a world-changing future and the cold, hard reality of today's financial performance.
If you want to see what extreme uncertainty looks like, this is it.
Wall Street analysts are just all over the place. Their price targets range from a disastrous $9 a share all the way up to a wildly optimistic $120. When the so-called experts are this far apart, it tells you one thing: nobody really knows what this company is worth right now.
So this whole debate really boils down to a simple bull versus bear argument. The bulls, they think the market is being short-sighted. They see a future where Casgevy sales finally take off and the company's deep pipeline of other drugs starts to pay off. But the bears, they just can't get past what's happening today, that massive cash burn and the constant threat of being leapfrogged by newer, better tech.
So, after weighing the incredible science against the very messy financials and these huge business risks, it is time for our final verdict. Where do we actually land on CRSP?
The science is a 10 out of 10. The financials, for now, maybe a 2. The potential is absolutely enormous, but the risks are just as big. So what is the smart move for an investor looking at this today?
Our verdict, based on everything we've looked at and the analyst consensus, is a hold. The upside potential is just too massive to recommend selling this thing. But the immediate financial and operational risks are way too severe to recommend buying aggressively right now.
So, we are adopting the analyst consensus average as our 12-month price target, $67.85. This really reflects a balanced view. It acknowledges that huge potential for growth if they can just get this Casgevy launch right, but it also respects the very real risks that are holding the stock down.
But look, I know a hold rating can feel a little unsatisfying. So if you believe in the future of gene editing, but you're a bit wary of CRISPR specifically, let's look at 2 other ways you could invest in this revolution.
Okay, 2 options for you. If you're a more conservative investor, you could look at Vertex. They're actually CRISPR's partner on Casgevy, so you get all of that upside, but it's safely tucked inside a stable, profitable giant pharma company. Now, if you've got a higher risk tolerance, you might look at a company like Beam Therapeutics. They're working on that next-gen base editing tech we talked about, which could be safer and more precise than what CRISPR has now. It's a much riskier bet for sure, but the reward could be massive if their tech becomes the new standard.
So CRISPR Therapeutics is just a perfect case study of brilliant science hitting the hard wall of market reality. The next year is really going to be make or break for them. They have to prove they can turn this amazing cure into a profitable business. Let us know down in the comments what company you want us to break down next. Thanks for tuning in.